Welcome back to FX Titan. In Forex trading, understanding pips, spread, analysis, and candlestick pattern is essential for making smart decisions. In today's video, we'll cover how to calculate pips for other pairs like JPY pair and gold pair. We'll also talk about what spread is, how it affects your trade. The two main types of analysis: the common candlestick pattern like the Doji, Engulfing, Morning Star, and more. Let's jump right in. A pip is the smallest price movement in Forex. Just like I said, it's called the sell of Forex. But calculating pips for JPY pairs and gold works a little different. Now, for most currency pair, a pip is the fourth decimal place. For example, if Euro USD moves from 1.1000 to 1.1001, that's 1 pip. For JPY pair, a pip is at the second decimal place. For instance, if Euro JPY moves from 109.50 to 109.51, that's 1 pip. So it's at the second decimal place. For gold, a pip is at the first decimal place. For example, if gold moves from 1,930.75 to 1,930.85, that's 1 pip. Here's how we calculate pips value. I said previously, pip value equals 1 pip divided by exchange rate times lot size. So let's say you trade one lot, that's 1,000 units of USD/JPY at an exchange rate of 109.50. 1 pip would equal 0.01 divided by 109.50 times 1,000, which is equals to $9.15. For gold, if you have traded one lot, the pip value is fixed $10 per pip because gold prices are quoted in dollars. If you don't understand this concept, you can go back, watch the video again. When trading Forex, you always see two prices. The big price. Now, this is the price at which the market will buy from you. And we also have the ask price. This is the price at which the market will sell to you. The difference between these two prices is called spread. For example, if Euro/USD has a bid price of say 1.1000 and an ask price of 1.1002, the spread is 2 pips. This spread is essentially a small fee you pay to the broker for executing the trade. Always check the spread, especially during high volatility, as it can affect your profit. There are two main types of analysis in Forex. The first type of analysis, which is the one that is really being focused on most of the time, is called technical analysis. This focuses on price charts, patterns, and the use of several indicators. Traders use tools like moving average, support and resistance level, candlestick patterns, and formation to predict price movement. The next type of analysis is called fundamental analysis, and it looks at economic data and news to understand what drives currency prices all around the world. Key reports, including the gross domestic products of countries, unemployment rate, and central bank policies, affects the market. And this is essentially fundamental analysis. Most traders use a mix of both fundamental analysis and technical analysis to get a complete picture of the market. Candlestick patterns helps you understand price actions. Mainly, it gives you a picture of the psychology of where the market will move. So let's look at some common ones. So many, but let's just look at this common ones. The first one is called the Doji. It's a candle with a very small body, long wick, showing indecision in the market. We have the high and low test candles. It's a candle with a small body and a long wick on one side, showing potential reversal. Tweezer top and tweezer bottom. There are two candles with almost identical highs or tops or lows bottom, signaling a reversal. Bullish and bearish engulfing. A large candle that completely engulfs the previous one, indicating strong momentum in that direction. The next is the hanging man. It's a bearish reversal pattern, a small body at the top and a long wick below. Morning or evening star, a 3-candle pattern where morning star signals a bullish reversal, evening star signals a bearish reversal. We have the 1-hour retrace, it can also be a 4-hour retrace, 1-day retrace, a 1-week retrace. And the best way to describe it is when prices pull back to a key level in an hour time frame, often followed by the continuation of the trend. It's recognizing these patterns that can give you clues about where the market might go next. To recap, we've covered how to calculate pips for JPY pairs and gold pairs. Normally, it's at the 4th decimal place, but for JPY, it stays at the 2nd, for gold, the 1st. The concept of bid price and ask price, and also spread, which is the difference between bid price and ask price. The two types of analysis, where we spoke about the technical analysis which includes candlestick formation, candlestick patterns to predict price, and the fundamental analysis, referring to news events that affect price change. Looked at the common candlestick pattern formation such as the Doji, the Tweezer Tops, the Engulfing Patterns, and so much more. These are crucial tools for any Forex trader. So take your time to practice identifying these concepts. In the next video, we'll dive into technical analysis and how to use platforms like TradingView and MT4. If you found this helpful, hit the like button, subscribe to FX Titan, and turn on notifications so you don't miss the next lesson. Drop your questions in the comments, and if you don't understand any concept, just go back and watch again. I'm here to help you.